90% of traders lose money, but here's why the other 10% get rich. They use simple yet clear trading setups. Today, I'm going to reveal the only candlestick setup I used, and I still use to turn into a profitable trader. So if you also want to be in the 10%, stick around, and I will reveal my foolproof strategy. At the end, I will show you my complete strategy with the trade I took on Bitcoin. Ready? Let's get to it. The only candlestick setup I use is the bullish engulfing pattern. But wait, what is a bullish engulfing pattern? Good question, let me explain. A bullish engulfing candle is a two-candle candlestick pattern that signals a potential high probability of a reversal of a downtrend. It consists of a smaller bearish candle, followed by a larger bullish candle that completely engulfs the body of the previous candle. This pattern suggests that buyers have overtaken sellers, potentially indicating the start of an upward price movement. A bullish engulfing candle works and has a high probability of success in Forex markets because it's a visual sign of market power shifting from sellers to buyers. So let's get to the psychology behind it. In a downtrend or pullback, sellers are in control. The first candle in the pattern is usually bearish, closing lower than it opened. Then, a second candle opens lower but surges higher, completely engulfing the body of the previous candle. This means buyers stepped in with enough force to erase the previous selling pressure, a sign momentum is flipping. So, why does it work in Forex specifically? Well, because of firstly, liquidity spikes. Forex is highly liquid, so engulfing candles often reflect big institutional orders hitting the market. Secondly, stop-loss hunting. A bullish engulfing often triggers short sellers' stop losses, adding fuel to the upside. And thirdly, momentum shift confirmation. In fast-moving Forex pairs, a complete engulfing suggests buyers aren't just testing the waters, they're taking over. So, when does it work best? At key support zones, especially near daily, weekly levels. After oversold conditions, confirmed with RSI/stochastic. With higher time frame alignment, e.g., bullish engulfing on H1 that matches the H4 trend. With volume confirmation in Forex, tick volume spikes can be a good sign. So, what are the common mistakes which traders make to lose money instead of making profits? Okay, let's check few common mistake traders make when trading using the bullish engulfing pattern. Well, one common mistake is trading every engulfing candle blindly, because in reality, most engulfing candles are found inside a choppy market are fake outs. Another reason is that you need confluence. Market structure plus support resistance plus candle pattern. Okay, now let's jump straight to the charts and try to identify the bullish engulfing candle pattern. We are going to be using TradingView platform as I deem it easier for use, but you can use any charting platform. You feel comfortable with the instrument I'm going to use is Bitcoin. But keep in mind this setup can be used for all instruments in the market. You can pause the video so that you can also try to identify it by yourself. Did you get it? Here is it. But remember, trading patterns alone don't work consistently because they're just shapes. Without context, they don't tell you who's actually in control of the market. But why, you might ask? Okay, I get you. Let's break it down further. Firstly, patterns are just symptoms, not the cause. Because a bullish engulfing head and shoulders triangle. They're all visual effects of price movement. But price moves because of order flow, not because a shape formed. If you only trade the shape without understanding why it formed, you're basically betting blindly. Secondly, market structure shows the bigger picture. Because the market structure will tell you, are we in an uptrend, downtrend, or range? Are buyers or sellers winning overall? Where is liquidity and order flow likely to hit next? An example of this is that bullet A, bullish engulfing inside a strong downtrend, is usually just a small pullback. The same bullish engulfing at a major support level in an uptrend can be the start of a big reversal. Thirdly, without structure, you fall for traps. This is a big one, because smart money and big players use patterns to trap small retail traders. Because you see a breakout candle, they see liquidity to fade. You see a perfect pattern, they see a place to run stops and reverse the move. Market structure plus supply-demand zones help you avoid these traps. You might ask, where do I start these lines of support? That's a good question. Let me explain. I always look for an impulsive push from the buyers, in which the leg has to be bigger than the previous leg. Then, I wait for a pullback, which will be my second point for my trend line to touch, as support trend line has to touch at least 2 points in order to confirm it's a real area where the buyers and sellers agree. Secondly, I will plot what I call my horizontal support lines, where I will also use the same principles as I used before, as my intention is to get support, to get the area or zone where I can expect the reversal. I will look for points where markets sort of settled. I will then connect those points, which forms a broad area for support. Then, after I have identified the support areas, I just have to wait patiently till I find that magical candlestick we all love, the bullish engulfing pattern. That is enough theory. Let's jump straight into the charts. This is an actual trade I took, which I am still holding. It is of Bitcoin. I normally like trading Bitcoin as it is a highly volatile market, which can potentially mean high profits or losses based on how you approach your trading and your risk to reward ratios. Drop a comment down below if you would like me to make a video which explains how I use my risk to reward to get maximum profit. As you can see here, the instrument here, it's Bitcoin, also known as BTC. I firstly look for support from the lowest point of the previous swing low. Then I draw a line to further connect the areas of support where I aim to look for a potential reversal zone. Then I further move on to draw a horizontal support zone. I call it a zone because you normally find a block which won't always be rigid like the previous angling support line, which we always want it to be near perfect. So after drawing those lines, there is only one thing short for us to get a confirmation to enter the trade. Yep, you guessed it right, the bullish engulfing candle. So, like here on the chart, we can see we have an engulfing candle where we wait for it to close in order for us to place a trade safely, which we can expect to greatly profit from. But wait, if you want to catch great moves without guessing, as we are now going to see great moves from the crypto world, as Bitcoin is going to reach new record high in the next couple of months, please check my description for links with great offers, so you don't miss out on this once-in-a-decade move if you are serious about investing in Bitcoin and to build a profitable portfolio of other coins like Ethereum, Ripple. If you have found value in this video, please like, subscribe, and share the video, as I am also going to be uploading 3 videos per week, so you don't miss out on other market-related videos. Until next time, trade safe.